Hi, and welcome to this edition of the Insurance Experts. It's my pleasure to have on the line Christine West. Christine is a disability specialist. Thanks for joining us today.
Yeah, thank you so much for having me, Mark.
So, Christine, first of all, I know we're both, a lot of people think that we look young, right? So how did you get into the industry? I know you have a lot of expertise and you've been in it for many years. Tell us a little bit about that.
Yeah, so I came into the industry out of college. I realized I was not meant to be an accountant. I need to be in front of people, helping people. Not that accountants don't help people, but I wanted to really make a difference. And financial planning seemed like the perfect fit for me. I got into the industry, and then I became a disability expert very soon after.
Okay. And so how did you get into that marketplace, out of college? Is that something that a lot of younger people are doing?
I think the agency that I was working with was bringing in a lot of younger people. This was almost a decade ago, so it was a great opportunity. I learned so much. And then how I actually got into disability insurance was by working with a couple of physicians. So I got into a hospital program. I started teaching about disability insurance, and I have this attorney mindset. I read all the contracts. I read the competitors' contracts, which now I don't have competition because I offer all these contracts as an independent brokerage operation. But I realized how important disability insurance was for physicians, and that's really where my passion grew.
Really cool. And then do you work with the physicians directly or do you work more with their advisors?
So both. We do have a great brokerage operation here. We offer various insurance products. I have a small niche passion for working with resident physicians. So in that regard, those are some of my personal clients. But we do offer disability insurance and life insurance on a wholesale capacity to brokers. So it's really both.
Okay, so tell us a little bit more about residents, first of all, and this terminology in the medical world. What exactly is a resident doctor?
Yeah, so a resident doctor, they've graduated from med school. They're now in a residency program, but they're not yet maybe an attending physician. They're not an owner of a practice yet. They're still sort of in training and getting a salary for doing that.
Okay, so they have a salary, but it's not necessarily a huge salary, right? They're kind of in an internship, so to speak. So why do they need to be considering disability insurance, first of all?
So what's cool is that residents know they need disability insurance. Their largest asset, despite what maybe other people would think, is their ability to earn an income. If they can't hold that scalpel just so, if they can't diagnose a patient, they're out of future earnings of maybe 5, 10, 15, $20 million. And they know that.
Right, and I think Warren Buffett said the best. He wants to buy future earnings of people like fresh out of college like this because of how valuable those earnings are, right?
Exactly.
Okay, so residents, kind of know that they have this risk, and I guess how do they know about this? A lot of people that are younger age may not know about disability or long-term care. Is it something within the industry itself, like passed down from other doctors, or how is that working?
Yeah, so attendings, older physicians, their program directors, they tell them they need this. And there's usually people like me in the hospitals giving presentations, lunch and learns, talking to them about this. Not only are they aware from that perspective, but they also see every day people coming into the emergency room, performing surgeries, people with illnesses, strokes, heart attacks, diabetes. They see our mortality every day. So they're aware that this could happen to them. They might not have that Superman complex that some of us have.
Right. So, okay, so let's talk about like what opportunities are available in terms of disability strategies. Are there deals available for residents, and what exactly can you bring to the table as a disability expert financially for them?
Most residency programs, usually it's going to be at a hospital system, there will be disability income discounts there, insurance discounts there. So what happens is the carriers will say, we have a pool of healthy, educated individuals, and they're young. We know that we can discount them because we have the law of large masses on our side. They're a great risk. So they will receive discounts. When they apply for disability insurance, there's no financial underwriting. So they're just being given a monthly benefit based on their level of resident, or if they're a fellow, or if they're maybe a first-year physician. They're already going to get an amount that they're going to be given, which is really nice. If they wait, they have to submit tax returns, prove that they make the money that they make. And not only that, in terms of an underwriting standpoint, a lot of these carriers will waive the medicals, the in-person medicals that everyone else has to go through to maybe get life insurance, disability insurance, long-term care insurance. There's no blood, there's no urine, there's no meeting someone face to face. You fill out an application, even online, some of the carriers have, where you do a phone interview about your medical history, and it's really streamlined, which is so nice.
That is cool. So tell us a little bit about a story. I know you had worked with a resident, and it's kind of a cautionary tale. So who exactly was this resident, and what were you presenting to them in terms of disability?
Yeah, so this resident had medical history. It was something I was concerned about during the underwriting process, and I certainly set expectations properly. I got an amazing approval.
Right.
I couldn't even believe it, and I was really excited for this person. Obviously, encouraging them to take the policy, and they decided not to because of cash flow. They didn't think it was the right time, and despite everything I said, sometimes you can lead the horse to water, but I'm never going to force something down someone's throat. And so a year later, they came back and said, hey, this is something that I want now. Cash flow's good. I maintained a great relationship with them. And I didn't think it was going to be much of a problem because their health hadn't changed since I had gotten this approval, with only one exclusion for a very good reason. This exclusion was on it. Well, now I'm going to the carriers. I'm getting declines. I'm getting rated contracts, more exclusions. And it's really because this is no longer coming out of a residency program. They're looking more closely at this individual because we no longer have the law of large masses and saying, okay, they're in a residency program. We can take on all this risk because we know it's a healthy pool of people. So it's important to get disability insurance when you're in your residency program. When you have that offer, take it.
Yeah, and I always get asked about when is the best time to buy long-term care, because I'm a long-term care expert. And it's like, as soon as possible, and these are kind of the reasons why, is your health buys you the coverage. And,
Absolutely.
And in this case, even the person's health didn't change. They had a great offer because they were a part of this larger group program. And now as an individual, the carriers were more scrutinizing it. So, it's a very important, and also financially, right? What do the pricing look like when you get it younger? Is there a better deal in terms of buying it earlier?
Yeah, so buying younger will always be cheaper because rates go up as we age. There's a few reasons why buying disability insurance now is more important. First is that pricing, right? So the price is only going to go up. Second, your health may change so that maybe you can't get disability insurance anymore. Maybe you're declined. Maybe you have exclusions now, right? So you're not going to get the contract that you hoped for. Or maybe you become disabled and then you don't have the insurance. So when you look at disability insurance, whether you buy it at, say, age 25 or age 35, over the life of the contract, those two people buying at 25 and 35 will pay approximately the same amount of money over time. So why not have that insurance in those first 10 years between age 25 and 35? You're paying for it anyway. Might as well get it sooner.
Very cool. Well, thanks for being on the show today. It's really exciting about what you're doing with residents and with disability, and we hope to have you on future episodes.
Love to be back on. Thank you so much, Mark.